Hello and welcome everyone. Welcome to the Gold and Silver Club end of week review presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So this live session will cover an end of week summary for gold, silver, oil and the commodity currencies. We'll be looking at the top trades of the week. We'll be doing live market commentary and technical analysis, and we'll also look at the week ahead, so key events looking forward, as well as answering any of your questions today as well. So there have been some massive moves on gold this week, a lot of opportunities to profit, mainly from the long side, but some opportunities to day trade, selling short as well. So we're going to talk you through our top trades of the week this week. The massive breakout that we saw yesterday was really the big news, which the Gold and Silver Club, we profited from. A lot of our traders profited from this breakout as well. So gold price soared 2.5% within 25 minutes to hit fresh 7-week highs of $1,370 an ounce, a key level that we were looking for the price to actually hit over the course of yesterday's orders, which all went in on the breakout of $1,348 an ounce. So we'll be talking you through that very shortly, but you can see there from the image just the massive breakout that we had yesterday. So we'll be talking through that very shortly. So gold price soars 2.5% within 25 minutes to hit fresh 7-week highs. Yes, so gold and silver ended with strong gains on Thursday as steep losses for US stocks and a decline in the US dollar lured investors into the safe haven of precious metals. So gold price actually soared 2.5% within 25 minutes to hit those 7-week highs of $1,370 an ounce by 6 p.m. GMT yesterday, from a low of 1,318 on Monday to Thursday. So hitting that high of 1,370. So gold price increased by an impressive gain of 4% in a week. Silver rose 5.3% to reach $23 an ounce and 17 cents. So its highest level since May the 22nd. And the gold market saw an initial selling pressure during the early US trading session on Thursday that offered actually opportunities to get in at much better prices on Thursday. So that was yesterday, after the weekly initial jobless claims showed a decrease of 15,000 to 320,000 in the week ending August the 10th. So the lowest level since October 2007. So we saw gold shoot down, and we'll show you in the charts very quickly. It broke 1,332 level of support, and it came down. It did find support at a key level around $1,318 an ounce. And then the news announcement, which really caused a big spike, and we do always say, watch the Philadelphia Fed Manufacturing Index because it's an important announcement for the gold and silver market. So following the Philadelphia Fed Manufacturing Index posted a worse than expected reading of 9.3 in August from 19.8 tracked in the previous month, markets had forecast a reading of 15 points. So that report triggered immediate sell-off in the US dollar. So that led to a breakout in gold and silver, which just progressed throughout the afternoon. We just had a huge move. In fact, from that 13.18 low, we rallied obviously all the way up to 13.70 later on during the day for over 500 pip move. So on Wednesday, St. Louis Fed President James Bullard suggested that September may be too early for the central bank to taper its stimulus program. So he said the Fed needed more economic data for the second half of the year before deciding to reduce the pace of its $85 billion monthly asset purchasing program. So Bullard also said caution is warranted in taking policy action based on forecasts alone, and these comments provided a positive impact on the precious metals as well. So we have seen a nice move, certainly since Sunday's breakout as well. So looking ahead, the big question will be where gold and silver prices are heading next week, and in fact today as well. We're going to be looking at that very closely. So just quickly, a little bit about myself and Nick at the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club and specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders and also a regular contributor to a number of financial publications and speaker at numerous trading seminars, webinars and workshops. Joining me on the call is Nick Kelsey, professional trader, investment analyst and speaker. So Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. Okay, so that's a little bit about myself and Nick and the Gold and Silver Club. Okay, so moving on, we're going to have a look at the gold price this morning. So gold right now is actually sitting at $1,362 an ounce and 69 cents. So we've had a little bit of a retracement since hitting 1,370, and we'll be looking at what's in store for gold today as well. The US dollar index, this was the US dollar index just last night, so we can see that we had a significant down move on the US dollar index. We've seen still a little bit of selling pressure this morning on the US dollar index. It's been chopping about, but at the moment we're seeing a little bit more selling pressure. We'll have a look at that very shortly on my platform, the US dollar index. One thing we do want to move across to is seasonality. So we discussed this last week as well, and we have, in typical fashion, in August we've broken out. So we were looking at this during August in India. We typically see heavy buying in gold due to the start of the gold festival, the wedding festival in Asia, something we discussed on last week's call as well. So this is where we're at the moment in terms of seasonality. So you can see there, this is a 32-year chart of gold seasonality. You can see where typically we do get a lot of weakness in the summer months in May, June, July. We bottomed out during June, and you can see here, seasonality-wise, this is where we are. So we could still see more upward pressure. We may get a bit of a retracement today, but certainly moving into next week, the next key levels are going to be 1393 and also 1415 moving forward. So we'll be looking at that as well on the chart. So this is where we're at the moment. So this was just taken yesterday. So you can see in terms of seasonality, we got that breakout. We're looking to break above a key level at $1,348 an ounce. We've done that, and at the moment we're still only midway through August, so we could still see a lot more movement to come. Okay, so moving on to the top trades of the week. Well, everything really kicked off on Sunday this week, Sunday evening, from the breakouts of gold, which was, again, fairly predictable move. So we had a really nice setup on gold on Sunday evening, and we broke through a level of resistance at 13.17 an ounce. So we got triggered at 13.18, and this followed through the whole of Sunday evening. Actually, we came all the way up to 13.40. So very quick in and out there for 220 pips profit. We didn't quite get past 13.47 resistance, but that offered an opportunity on the breakout yesterday. So that was the first of many trades this week on gold. Sunday evening, 60-point risk on the trade. The profit was 220, so each lot traded $600 risk for 2,220 US dollars profit for a 3-to-1 on gold Sunday evening. And then the next trade was this was a sell short on gold. So after we actually came up to 13.47, we were finding quite a lot of support. We had a key level actually just at 13.33, and you can see here progressively the candles giving us a very nice sell short signal here. We got a breakdown of that, and that's happened a couple of times this week where we found support at 13.33, broke down, came to 13.19 support, took profit. So very simply, risk of 50 points, $500 risk for each lot traded, 140 pips or points profit there, so $1,400 profit on each lot for a 3-to-1 just on a sell. And the next trade that we took this week was gold. This was yesterday's gold trade. Now, yesterday's gold trade was something that we've been waiting in the wings for quite some time. So we tested this level, $1,347 an ounce. We tested it on the 24th of July, had a failed attempt at that level. We then tested it again on Sunday, on the 12th of August. And by this time, we were very prepped to take advantage of the breakout. So a lot of our Gold and Silver Club traders also took advantage of this move. Very straightforward with pending orders. We caught the breakout literally from $1,348 an ounce. We had a huge breakout, nice big spike over the course of what we particularly liked about this trade is that over the course of about 20-30 minutes, we'd already reached over 200 pips on this trade. Very quick breakout. You could have banked then, and then slowly over the course of the evening, we hit our profit target of $1,370 an ounce, which was a key level that we had put our profit targets at. So each lot traded was 50 pip risk, so for $500 risk on each lot traded, for 220 pips profit for 2,200 US dollars profit, for a 4-to-1 risk to reward, and a very quick breakout trade on gold. And then moving on, we also traded, had a really nice breakout trade actually on oil this week as well. So Brent crude, the Energy Information Agency Administration actually came out on Wednesday at 3:30 with their inventories. The forecast was minus 1.4 million barrels, and they had a deficit. So they came out with minus 2.8 million barrels was the deficit, and we saw a really nice breakout. We broke out from 108.46 US dollars per barrel, and we actually reached our profit target over the Asia Pacific session. We came out at a previous level of resistance, $110 a barrel, which gave us a really nice 3-to-1 risk to reward. So 50 pip risk on the trade for $500 for each lot traded, for 154 pips profit for 1,540 pips profit there on a really nice breakout. And now we're just going to be looking at that key level of resistance, which we'll talk about very shortly on the live technical analysis. And finally, New Zealand US dollar, we've been trading this long and short. It's come back up to resistance again now, but this was a trade that we took just off our live trading room as well. Long position going in at 0.7971. We came out the next day just at 0.8037. Very quick day trade within 12 hours, 25 pip risk for 66 pip profit. So $250 risk for $660 profit, for a 2.5 to 1 there on New Zealand dollar New Zealand US dollar. So those are our 5 top trades this week, but in fact we've been in and out a lot of day trades this week. It's been fantastic, very profitable week this week, fantastic for day trading, especially the gold market in particular. So we'll look across to the charts now, and we will talk you through what we're looking at now really with the market. So first of all, we're going to start off with our Reuters platform, and we'll look at what the US dollar index is doing, and then we'll move on to some live technical analysis for you guys. So this is just the Gold and Silver Club, a custom-built Reuters news trading platform, just exclusive to our traders, the setup that we've got here. So you can see here, first of all, the bottom right-hand corner, I just got the US dollar index. You can see this big down move that we had with the US dollar index yesterday, which correlated to gold and silver spiking yesterday. So we also saw USD CAD sell off, but the real big move was on gold and silver, based on after the Philly Fed, which saw the US dollar index just tank, and we had opportunities to get in gold and silver. You can see this morning we did get a nice rise, a little bit of a rise in the US dollar index. However, that's coming back down again. So we're seeing gold just supported around the 1,362 level at the moment. Just going up to the top right-hand corner here, so the big movers and shakers today, we're seeing silver actually retracing quite a lot at the moment. So we're going to be looking at silver. You can see Australian US dollar is the biggest gainer of the day. USD Canadian dollar is also getting some strength, so along with the US dollar finding support today. Mixed here, New Zealand US dollar, gold and US dollar index all a bit neutral, and we can see Brent crude oil selling off, and silver. So we'll look at that very shortly. So you can, we'll just have a quick look across here, see major news. Actually, we're going to be going on to the major news which is coming out, but I wanted to show you also going on to the 2-year chart for US dollar index. We've also got that major level of support. In fact, 5-year probably give you more, a better view. We've got a major level of support is holding on the US dollar index at the moment. Obviously, if that does break over the course of next week, we'll probably see much higher numbers revisited on gold. We could make a run for $1,400 an ounce on gold if we break through this key level of support for the US dollar index. So we'll be looking at that, paying very close attention to that over the course of next week. Okay, so just moving on to my charts. Okay, first thing we want to note is gold seasonality. Where are we at the moment with gold seasonality? We can see there we broke through some key moving averages just on Sunday. Actually, this is where we broke through The 50 MA was a very key level to get through as well. You can see we've been down below that for most of the year. We broke through that just on Sunday evening, and since then this was a key level of resistance, 1347. We've broken through and we're now finding support around the 1360 level, where you can see here, actually just going back in the chart to May, where that provided a level of support. So is now providing some support at the moment on the market this morning, but we could still potentially reach higher levels throughout the rest of August. We may not get there as a straight line. We could get a retracement back to 1348 before the next leg up. So we'll look at that very shortly. So that's gold seasonality. So moving on to gold. Gold at the moment definitely finding some resistance at 1370. We're putting in a bit of a doji there, so a bit of indecision in the market. Certainly going to see some profit taking. That is a key level of resistance there. So if we do get some profit taking here and we see a little bit of retracement, we would be looking at the market coming down to retrace to around about 1349 level, which is the key level of resistance previously. It's not uncommon for markets after they've had a big move to just do a retracement and come back to previous resistance before they find support there in the next leg up. So we could see that, or we may get supported. Let's just have a look here. Around the 1357 levels where we've retraced to at the moment, 1360 finding some support. We'll need to just look at silver and copper as well, just to get an idea of what those markets are doing as well. And the US dollar index will provide further insight. But here are the next key levels up here. So 1415 is really going to be the next key level. If gold continues this breakout, we get a breakout beyond 1370 moving into next week. So we'll be keeping a close eye on that. So those are the two levels we're looking at right now. Moving on to silver. So silver also came up to a key level of resistance that we were looking at. We've managed to break through each time key levels since Sunday. So this was actually the breakout we got on Sunday open. We gapped up. We never actually filled that gap. So we gapped up to $20.70 on Sunday. And we've broken through three key key levels, three key Fibonacci levels as well over the course of this week. So it's been a phenomenal move on silver as well since we broke out Sunday night. 250 pip move there. Not as impressive as gold, but still a good move. Most of the brokers out there, silver is leveraged by 5 times gold, so you can still do extremely nicely on silver. So silver here, we broke through a lot of key moving averages last week on Friday, and we can see broke through, let's just go to the key levels here, broke through 2070, broke through 2150, broke through 2120, and we've just come up and found some resistance. So yes, we could get some profit taking at this level. We're getting a doji sort of inverse hammer form on the daily time frame. I would expect if we did get retracement, the price could just come down and retest 2020, previous level of support here as well. If we do see profit taking, or we might just hold around where we are. We might just see a bit of a pause at the moment, like we saw midweek on Tuesday. We've got a bit of a pause before the next leg up. So the next level of resistance, there's not too much stopping this market really getting back up to the 25-26 zone. So, but we need probably some more data coming out of the US in order to really push this market higher. So that's going to be your next key breakout level there for silver. So it's going to be wanting to get above about the 23.20 level for the next leg up on silver at the moment. So that's what we'll be watching. So probably some traders are going to take a bit of a breather today now. But this is what we'll be potentially looking at for the next key level and the next breakout on silver. Moving across to copper. Copper's still going strong actually. So copper has come up to another key Fibonacci level, actually 38.2 retracement. So settling at 3.366 at the moment. Copper's had some indecision this week, but also got a nice move from the US dollar weakness yesterday, along with gold and silver. So we can see it's reached the next profit target, and it's finding a little bit of resistance there currently at 3.3660. So copper again could get a breakout. So we'll be looking at just 2 levels in the short term here. So potential breakout up to around 3.4165 level, or we could just get some retracement here and just come back to this level of support just at 3.314. Okay, so that's copper. Moving across to Brent. So we had a really nice breakout on Brent this week from the 108.43 level. This was, again, if you're joining us a little bit late, this was on the Energy Information Administration. They had forecast 1.4 million barrels, a deficit of 1.4 million barrels. and the actual figures that came out were 2.8 million. So we saw the Brent crude oil market start to broke through a key level of resistance and rocketed, and it came all the way to our profit target of $110 per barrel. And we can see that we've actually found resistance there as well. We bounced off that with pinpoint accuracy yesterday, so that did offer a nice day trade there just on the way down as well. So you can see there, nice its maximum was a 4-to-1, but out at a 3-to-1 for a sell short. And we're just going to be viewing this market with our alerts just to see if we get a retest of 110. So the next key levels really, we are going to see if we get either, so two levels to look at again on Brent crude oil here. Either breakout above $110 a barrel, in which case we could come up to $111, about $1 move, could be reached fairly quickly here. And if we get a retracement here from $110 a barrel, we could just see this retracement come back down to previous resistance at 108.43. So that's what we're looking at on Brent. Moving across to New Zealand US dollar, that's looking interesting this morning. Just hit a key Fibonacci level. Look how many bounces we've got of this. 1, 2, 3, 4, 5. Had several bounces off this previously going back to June. So we're seeing that again today. We just come up to that level. It's been pretty predictable. 0.81066 is the key level in New Zealand US dollar. So we are seeing a little bit of retracement from that level today. And so if we do continue to, it's going to depend on the dollar, the US dollar index today. So probably the US session is going to give us further direction now. But if we do get a strengthening US dollar today, we'll see gold and silver retrace a little bit, and we could see New Zealand US dollar just come down to around the 0.80213 level and possibly 0.7960. So from a risk to reward perspective, it will look something like this. So could be some quick day trades in there. So we'll be keeping an eye on New Zealand US dollar today. Obviously a breakout above that key level of resistance. We would expect probably a move just up to the next key Fibonacci level here, which is going to take you around about 0.81790. So there's some activity to be watching on today. So you've got really gold, silver, certainly wants to watch. New Zealand US dollar, Brent, we're going to be keeping a close eye on as well. Moving on to Australian US dollar, not as lucrative right now. So Australian US dollar, I'll just keep it short on this. We have had some nice trades this week. They're taking a little bit longer to go to fruition, but we have had some nice swing trades this week for a long position on Australian US dollar, where we found support earlier on this week, and we can see we're just finding some resistance at key moving average today, and we are, let's just go into the 4 hour actually. So we're just chopping around on Australian US dollar at the moment. So really we don't like to trade it unless we're at key levels. So we'd rather it come back up to test resistance at 0.9255 before we get interested on this market at the moment, or if we come up to this key moving average at 0.9197. So that's what we're looking at on Australian US dollar right now. But New Zealand US dollar are preferred because they're very correlated. New Zealand US dollar is being much more technical at the moment in terms of these key levels. It's much more straightforward to trade right now. Moving across to USD Canadian dollar. So USD Canadian dollar just moving really nicely between key Fibonacci levels. Currently, so you can see they came up to Fibonacci resistance, 61.8 retracement at 1.03675 during the week. Gave a nice sell short, came back down to the 23.6 retracement, just below 1.02955. On the daily time frame, you've got a key trend line here, trend support, which is really seems to be holding at the moment. We've got key levels of support at 1.0265, key levels of resistance at 1.0444. So we're just going to be trading really along the lines of these major levels. And at the moment, there's not really too much in terms of key levels that we're testing on USD CAD this morning, but we will be keeping alerts on at key levels. So USD CAD right now going to be decided really whether the US dollar index, if it continues to weaken, we'll see USD CAD come down and test possibly key levels of support. If the US dollar gains strength today, we'll probably see the USD Canadian dollar gain strength as well, come back up to 1.03466 or 1.03670. Okay, so that is the market covered that we wanted to go through. So let's we'll go across to your questions actually. And before we go across to major news coming out this week. Okay, so question from Manoj, just in terms of the broker we use. Yeah, Manoj, just fire us an email after I'll give our contact details after the webinar, and you can get in touch with us via our email there, and we can talk you through that. Just a question on our broker. Okay, that's fine, and let's just check for any other questions. I think that's it for the time being. Good. If there are any other questions, do let us know. Okay, excellent. So moving on. So the week ahead. So key news that we're going to be looking at over the course of this week. Okay, we want to be first of all want to be looking at today. We've got so for the USD CAD, we've got 1:30 p.m. We've got the CAD manufacturing sales, and that measures the change in the overall value of sales made at the manufacturing level. So a higher than expected reading should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish. And that's important because the CAD is correlated to gold and oil prices. We've got later on today, we have at 2:55 p.m. the Michigan Consumer Sentiment. So again, this is going to give more indication on which way the US dollar index is going to go today. So the index rates the relative level of current and future economic conditions. There are two versions of this data released 2 weeks apart. The preliminary data tends to have a greater impact, so a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. So this afternoon, 1:30 and 2:55, we've got a couple of announcements that will affect the commodities markets. Next week, we have next Wednesday and the 21st of August at 3 p.m., we have US existing home sales. That measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing market. So it's a key indicator of overall economic strength. Higher than expected readings should be taken as bullish for the US dollar. Lower than expected readings should be taken as bearish for the US dollar. Moving on, we have next Wednesday, so our US crude oil inventory. So if you trade oil, you want to be aware of this. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms, they report their inventory levels to the Energy Information Administration on a weekly basis. This week it was very straightforward. As I said, we got a forecast of 1.4 million, minus 1.4 million. The actual was minus 2.8 million, and we saw a breakout in Brent crude, which was very straightforward to trade. Higher than expected readings should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish, as we saw this week. Next Thursday is 1:30. We've got the CAD core retail sales. That measures the change in the total value of sales at the retail level in Canada. So that's an important indicator of consumer spending and is also considered a pace indicator for the Canadian economy. Higher than expected readings should be taken as bullish for the CAD. Lower than expected readings should be taken as bearish. And of course, that's important because the CAD is correlated to gold and oil prices, inversely correlated to gold, correlated to oil. So next Thursday at 1:30, we also have US natural gas storage. So the Energy Information Administration natural gas report on the natural gas storage, measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while this is a US indicator, it tends to have a greater impact on the CAD due to Canada's sizable energy sector. So that's important because the CAD is also correlated to gold and oil prices. And then finally, 3 news announcements towards the end of on Friday next week. So we've got next Friday is going to be a busy one as well. We've got next Friday at 7 a.m. GMT, German GDP. So that's the gross domestic product, and that's the broadest measure of economic activity. It's a key indicator of economic health. The quarterly percent changes in GDP show the growth rate of the economy as a whole. So higher than expected reading should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish. That's of course important because the euro is correlated to gold. Next Friday at 1:30, we have the CAD CPI. So that's going to be important for your CAD trades. Okay, so that measures the change in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. That's a key way to measure changes in purchasing trends and inflation. Higher than expected readings should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish for the CAD. And that's important because the CAD is correlated to gold and oil prices. And next Friday at 3 p.m. we have the US new home sales. That measures the annualized number of single family homes that was sold during the previous month. Higher than expected readings should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish for the US dollar. So plenty of news occurring over the next week. Okay, so moving on. So the next live trading room that we've got is going to be next Tuesday evening at 9 p.m. We hope that a lot of you caught the profitable trades this week. It's been an incredibly profitable week on gold with a lot of very straightforward technical breakouts. So if that's something that would interest you, being able to trade those live, do get in touch with us about our live trading room program exclusive to the Gold and Silver Club. So to request information on our live trading room program, you can just go to www.jointhegoldandsilverclub.com or contact us at our UK London office is 0207 193 0403 or contact us at our New York office, which is +1 646 808 0403. Or of course email us. We've got a couple of questions there about the broker that we use, so you can just email us at office@thegoldandsilverclub.com. That's to manage in particular there. And of course, if you to request information, just go to jointhegoldandsilverclub.com, complete the form to request additional information on our live trading room program. And make sure you subscribe to our newsletter. You will get free weekly gold, silver, oil and commodity currency news, live market analysis and prices. Okay, fantastic. Well, that is it for this weekly review, guys. We'll catch you here at the same time next week. Good luck for the rest of the week's trading, and if you've got any questions, need any help at all, do get in touch with us on the contact details on the screen. Okay, all right, take care everybody, and we'll see you on the next one. Goodbye.